Welcome to TradeTheNBA.com. This is John's reports for the 18th of May, and well, Thursday's action was lackluster at best, though intraday, quite a nice move. The reality is that we were at the top side of the magenta ABM reading there, right around the 27.30. We got to 27.32, and then on the low side, we were at the 61%, 27.09. We did 27.11, so well, it's 09.75, so really 10, so within a point of both of those ranges, meaning that we had the ABM green at 17.50 is long above kind of situation, and pretty much waited at the 24-ish. Well, the close was at 18, but right now we're at the 24 if we look at the current range of price. And that puts us literally right at the white line going forward, right in there. What we've got from a DOC standpoint daily is just yuck. Green below red, meaning weakness. Green actually trailing lower, even weaker. Hovering right at below the negative 7.5 line is the red long-term buyers, and that's not doing anything for us. The short-term buyers have been keeping this elevated, and that's the only thing. And then actually the falling orange helps that. But as soon as orange ticks up and steel ticks down, you would have a very significant drop, and you'd be definitely looking at that 26.79 as a target range. At this particular point, there's still plenty of shorts in there, so they're still riding this wave within the continuation zone, and that's what we've got as a continuation, because between cyan and red, when you have steel and orange, you're in continuation. Well, continuation of what? Yes, this upside move. So that's the current status of things. It's a little bit different in the NASDAQ, not a whole lot. You can see that we're still kind of parallel. They're just at a little bit higher levels. You don't have the declining green like you did before, but you've got a straight line up here with the steel, and they're meeting right there. But again, it's not like we can call this a snake where the orange or the steel crosses each other and you have the cyan coming in the middle, because the cyan clearly is outside of that range at this particular point from the daily. No problem with that there. The euro continuing to make the lower low, though, on the higher extreme. Not so much on the higher shakeout. It hasn't quite turned around yet to support anything. And clearly here, it's like once you had this move that, and this is where it gets difficult to describe sometimes because of the inversion play that happens, from your, what you would consider a bullish stance right here, but not so bullish when you're having green well under red on the DOC. And like over here where it's super bullish with cyan under red, when you have cyan over red, and then you get the steel running in there, you end up with these long trend runs to the downside. We would expect this to base out, though, because if you make a slightly higher shakeout reading here with the improved extreme histogram, the problem for it was last time it popped right here to the 23%. It was almost in the extreme category with the yellow pointing there, and that's never a good sign when you haven't even broke the 23%. So we would expect more weakness from the euro there, because they just don't need to float it any longer. With rates rising in America, that's not needed. And we've been calling on that one for a long time. We're down to 116 here for TLT. We were expecting somewhere in the 113 range and have been projecting that one for quite some time. Despite all these, I have to shrink the chart. There it is right there, the 113.16 range. From the 120 short. So, and that's just an expectation of the inflationary pressures that are going to be a result of this rise in oil that we've seen progressive. This is a super strong shakeout here for an extended period of time since, we've noticed this rally since all the way back here in middle part of February, kind of consolidated for a while, and then it just has been making these slow ebbs up. And, in a growing economy, that's always going to be an issue for oil. It's not necessarily about supply in this case, it's about the ability to actually refine it as well. And there's limited capability at this particular point. Gold should be climbing off of this kind of setup that it's not. It's an interesting development. It's not like you're getting any action from Bitcoin to counter it. In fact, it's making new lows here right down at the 79 range as it becomes more problematic for it to transition into regular action as far as commerce. So I thought I would go over this one. This was a couple of days. Well, actually, maybe it was just the other day. Let me see what day it was actually. Let's put that on there. It was the 16th. But I wanted to talk about, there was a beautiful situation where we had a series of DOC spreads that, which is where the cyan moves above red, and we would typically refer to that as a short. However, there are three different setups here, and even a fourth over here that's even a little bit more bullish than the others. Let's talk about the weakest one. What happens here is when you get a DOC spread and you've got this huge spread of the original snake that took place right back here. So where they met and crossed right there, and the snake with the cyan in the middle, and you have like this wide open mouth, and that was really the beginning of the short. And then by the time you get to the DOC spread, it's already gone to its maximum. And so what it starts to do is it starts to squeeze. Now, this is not a problem if it stays above 13.5 for the orange, or if it stays below for the steel. Then yeah, you should see an immediate decay. Well, in this particular case, you get like 1 or 2 bars, but the problem is that normally for the steel, what you like to see is it cross the red as a indication that you have the movement in the right direction. And even though that's like kind of the antithesis of bearishness, because when it's moving lower, you're expecting a more bearish move. But what it does is it's like a trigger. And so this becomes the weakest setup because it's a very long time before it's going to get to that setup. Another point I always like to look for too is I like it when I have cyan over 0, and particularly when they cross all the same. So this would be what I would consider one of your weaker setups, and not as bad. If you have a proper stop setup, and that it's just not going to produce a lot. Now, much more solid from a bearish standpoint would be this, where you have the steel closest to the red. And usually what you get, you'll see it right here, it takes across the continuation of the opening of the mouth, so to speak, from right here they met, boom, mouth's open, comes across, and then right there it begins the trigger. And then what you look for is where the cyan, the steel crosses the cyan. And at that point you would think, oh, I got a little bullish tint to it. No, not with green well under red at this particular stage, and certainly not without orange having dipped below the two of them. And then sure enough, that gives you your cascade that takes you down through it. But unfortunately in this case, you do finally get the crossover. You get the steel all at the same time, and you get the bullish dip of the red line right there at the base of the 50%. And that 50% would have become the natural transition point. So that was a mediocre one. It's certainly better than the weakest setup, but produced the result. So nothing to complain about. The ideal setup that every time you see this is an easy one. When you get the dip below the red line and a move back above, and you have steel above cyan and the red, it's just an automatic short. Those just usually produce the most dramatic, quickest moves right away. Definitely worth watching, and you can go back and check that. It's like even if we go back to this fourth one, like over here at the beginning, the same situation, because the red is so far away from it, and you've had this peak opening, and you'll notice how soft the roll of the red was compared to the sharp turn of the orange. This is an indication that the buyers were just coming back through this, and literally crosses the green immediately. And at this point you had shorts all the way at plus 7.5. There's not a whole lot of room for that, so you've got another alien mouth inside the larger snake move right here with the cyan and then the green. So you would expect that at that point you should be getting some serious traction by the time you get to this bar going south, and in fact immediately you get a reversal. Fortunately, the nice thing about a lot of these is that even when you see this and you're like, oh shoot, this is not going to work, oftentimes you get a huge pullback within them that pretty much can give you pretty decent escape routes on a lot of them. But in this particular case, it just literally crosses right above, and you get another DOC spread that happens exactly in the configuration that we just talked about for the premium, where steel is above, and that's an automatic short, and boom, right there, and sure enough, it takes you all the way back down to the 50%, which then produced, I mean, there's nothing you can do if it's just going to turn around and produce a buy signal, but at least you had the correct entry from there and a much stronger directional flow, so you don't take the heat that can come from those. So I just wanted to throw those out there because it's a deeper understanding of best way to handle those kind of trades. This is an interesting intraday setup that developed here. We ended up with nice little buy signal. The first dip of the orange happened to be exactly at the rise of the 50% and close over there. And literally, this is one of those where I just love it. It's like, okay, you see the buy configuration, you got a little bit of muck. It's like, okay, I'll put just the buy in right there, and if it comes up, you know that you're going to be in position for it. Not to mention you had the cyan move below red, bingo, and it produced a nice 10-point run. Well, that particular point, it produced a modest DOC spread right at this particular point. Where I felt it was a little bit stronger from the setup was right back here. You started with the opening of the snake, but I like to see my cyan get to that 0 point, which was right about there. So I was shorting right around in the 30 range as this was coming through, and then the DOC spread hit. And the beauty of this one is that the orange stayed above the 13.5 for the extended period that gave enough time, as well as the steel, for it to bleed down. And at that particular point, you came very close to the orange in that. We ended up with this setup that you got the oversold within that green, and crossing of the red with the steel produced a little bit of the bounce, which was right there. And then interesting thing happened. The green couldn't get over the cyan. That becomes a critical aspect once you've reached these crossover points, particularly with the orange dipping. You've got to see that green crossover, because as soon as the orange comes up, price is going to start decaying. And sure enough, big drop, boom, consolidated for just a teeny bit. No reset of the orange, and what did you get? Additional cascade lower, and that just made new lows. So basically you had your full range, the 15 points from here, the bottom all the way to the top. From the top, we had reached 19 points, and that made it all the way to the bottom there, and that expanded the range to 20. Produced a decent buy configuration right here at the extreme oversold, that minus 20 line. I like to put it there because when you get those dips there, usually you get a bounce back, so it becomes a good spot to cover just in case. At this particular point, by the time we got to right here, we ended up with the higher extreme having retested the same lows. So that criteria had already been met, unfortunately, because sometimes I like it when they continue up from there, and then you know you're going to get your retest. And of course, then we turned into our blue color here for the buy configuration, and sure enough, that took us all the way to the 50%. But right getting up to the 50%, things started getting really soft right there as the steel came, the cyan came over the green, and then the green started to dip below red right about here, and boom, a little bit of weakness. Basically, this is sort of like where they take the run here and the 50% move, and that's exactly what it did. And then right for the 50% move, it consolidated. So you would call this an A, sort of B, C kind of setup, and that's exactly what it did. But run long, Friday action coming in here. We're still in continuation mode, bullish from the daily standpoint. So nothing else to add to it. That I've went a little long here, but I thought that was some important information on the DOC spreads there and how effective it can be to read those, and the difference it makes in your entry and how much heat you might take given the play. As always, though, trade well. We'll talk again later.